Hey everyone, Justin Holland here with the Mad Insurance Show, making a difference in insurance. So we cannot thank you enough for joining us today. We've got our video of the show that's going to get broadcasted out, and then we're here on the radio as well with KTSA 550. So cannot thank y'all enough for joining us for once again another show. This is, I believe, our 11th episode, and this should be a good episode. I'm actually going to spend the majority of this show to talk about scenarios that we've been seeing during the open enrollment for our annual enrollment period for Medicare, the annual enrollment period going on for the Affordable Care Act, as well as what we're seeing with small and mid-sized group health insurance plans. It has been a challenge to say the least. So we're going to dive into that aspect of what we're seeing, and hopefully it provides some value to everybody out there. Just as a reminder, again, my name is Justin Holland, and we've got the Mad Insurance Show basically to complement Texas State Insurance Services, a local insurance brokerage here, where they focus on Medicare and individual health insurance plans, as well as small group benefits. We'd love to help you out. If you need any assistance with that, reach out to us at Texas State Insurance Services, 210 880 5316, and we'd be happy to take a look at what options you need. You can also visit us online at txstateinsurance.com. So we've got a website with a contact form and obviously our phone number on there as well. And we can have you reach out and let's see if we can assist with your Medicare insurance, your individual health insurance, or your small group benefits. Palmetto Life Group is another division that we created, really focuses on life insurance, long term care, helps out with some retirement as well. But we've got a niche on that life insurance and long term care for assistance there. I'm a registered Social Security analyst, an RSSA, and we do our Social Security analysis through Palmetto Life Group. So if anything like that you're needed, let us know. We recently brought on auto and home insurance. So Palmetto Life Group can absolutely help you out with an auto and home quote or umbrella insurance as well. So just keep us in mind for any of your insurance needs. And if it has to do with auto and home, that would be great. We're real excited about that because we help out so many people on their health insurance. It just makes sense to broker it out with us for the other lines of business as well. And I have to admit, selfishly, our industry is going through some changes, and that's just something that we needed to bring on board to offset some of the disruption that we're seeing in the industry. So that gives you a little bit of station identification and the show identification of what you're listening to. I created the Mad Insurance Show just to make sure we are bringing on guests that provide value in the industry, and as well as just talk about what we're seeing in the industries. It could be auto and home insurance. It could be health insurance. It could be life insurance, long-term care. We've been reviewing all of those over the past few weeks. And this show, like I mentioned a moment ago, is going to be dedicated on what we're seeing on the individual health insurance plans. So let's dive into that. I've got my laptop open here to bring up some scenarios that we're seeing in the market. And I'll tell you what, I just 1 minute I think I've seen everything, and then I do a review with a client, and I'm like, wow, we haven't seen this before. But what I wanted to dive into is some of the extremes that we're seeing on the individual health insurance market. Um, I had one individual, they're currently with Blue Cross Blue Shield on their individual health insurance plan. They've been very loyal to Blue. Blue's been a good plan on the individual side. Despite it being an HMO, it's taking care of some medical concerns that came up for this family of three. And they definitely have a challenging renewal because for a family of three, for this particular scenario that I want to visit about, it's significant. They're already spending $2,692 a month on their premium. Okay, that's just a premium. They're on a gold level plan, so it's a higher tier plan for them, so they can have a little bit lower deductibles and copays. But $2,600 is ultimately what they are facing for this year. their increase was gonna go to $3,968 a month, okay? That doesn't include the catastrophic exposure that you have of $10,000 for the, out-of-pocket limit, that increased this year for 2026 or going into 2026. That is, let's just round up, a few dollars here. That's $4,000 a month. Okay, $48,000 a year in premium, and I mean, I'm kind of speechless. Okay, when we see these type of premiums for to insure three people, um, granted it's a higher tier plan, we got a problem. Okay, we got a big problem, and I'm hoping that we're gonna see some changes. I keep on bringing this up. I've been Chicken Little on this for a while in the industry. Um, this is just the individual health insurance. We're seeing increases on the group benefits side. We're seeing disruption on the Medicare side. But going from an already high $2,692 premium, let's just call it 2,700, to 3,968, let's just call it $4,000 a month. This is where, we've just got an unsustainable situation. Now, with this client, we're looking at some alternatives to possibly do group benefits plans, maybe some alternative coverage. Um, I say that there's some pre-X conditions that could be a concern there. So let's process this. They're on a plan where it's guaranteed issue. There's no medical underwriting that's going to hinder them from continuing this plan or maybe changing to another carrier in the industry. But the sheer cost of that is going to be tough to get over. But that gives you one very extreme, is probably the highest I've seen so far on what just a family of 3 would be facing off of that. But where I was gonna go with this is the health coverage. Um, Health coverage out there, you'll see it online. They tout like a PPO network. They're ultimately piggybacking off of a PPO network, and if you qualify, through their underwriting or their questionnaire knockout questions, then that could be a viable option. Make no mistake, health coverage and these alternatives, you got to be healthy. So that's the challenge right now. Is there's not a lot of healthy people out there, believe it or not. I mean, we've got many. Don't get me wrong. There's a lot of clients that are healthy, or individuals and families that are healthy, but many are not. And it just seems like that's a rare situation where we've got somebody that just doesn't have anything going on, cardiovascular wise, diabetic wise, and that can be a challenge on trying to get on a more affordable option because you didn't qualify for any assistance or tax credits. In a situation like this where we see somebody that was spending, currently $2,700 a year on their premium, I'm sorry, a month on their premium and going to $4,000 a month, there should be opportunities or scenarios for them to, first off, not to have to pay that much. And secondly, maybe have some tax incentives to be able to leverage no matter what income bracket they're at. Because I don't care who you are or how much money you have, $48,000 a year in premium is absurd, for the health insurance industry. And I'm a broker. I'm an agent. I'm in the industry trying to make sure we look at every option and solution for our clients, and we're running out of solutions. We were real excited, to help people get affordable insurance with the expanded tax credits that are expiring, because that opened up to the middle class that were on those fringes or those cliffs, so to speak, of not qualifying for affordable insurance. And I am really hoping that we see some smart people, smarter people than I am, come in and really analyze what we can do for this industry on the individual side, Medicare collectively, as well as the group benefits side, because we're in a position where we handle all those aspects of the health insurance industry, and I'm one of those rare guys that sees it all: the individual, that group benefits, whether it's a small or large business, or the Medicare, and it's kind of all clumped in together. They're kind of interlinked through the Affordable Care Act and how they operate. And again, I am speechless based on what we're seeing here. So the Affordable Care Act has been pretty tough, actually brutal for a handful of our health insurance reviews that we're doing for clients, and that's one extreme example. Another client, I'll bring up, a family of four that's facing a renewal, and we're going to take a look at that. This is a family of 2, 4, 5 people that we helped out and we're reviewing for. They actually qualify for the extended tax credits based on their family size and their income. The premium for the 5 individuals on this plan is $686. Again, for a gold level plan, a little bit stronger benefit. Believe it or not, sometimes the gold plans, actually not sometimes, most of the time, every time, a gold health insurance plan on the marketplace is going to be less expensive than a silver plan. That's a whole nother topic, by the way. But for this family, they are right now have a manageable premium of $686. The tax credit or subsidy that's helping bring in these premiums lower is bringing that down to a $686 premium from an $1,858 premium. So almost $1,900, close to $2,000 a month. This gives you a good scenario of that family of 4 or 5 that qualified for some assistance and savings and are fixing to lose it. So on this example, remember, it's $686 a month for this family. If they didn't receive the subsidy or assistance, it would actually cost them almost $2,000 a month. Now, let's take a look at if they wanted to stay with the same plan going into the next year, what that will look like. And I'm processing this in the computer right now on our program. And ultimately, if they kept the subsidies, if they still qualified, that same plan is going from 686 to 1,089, almost $1,100. Okay. They are more than likely going to lose their expended tax credits. Okay. So what's going to happen there is they're going to go from 686 a month to over $1,000 a month for their family coverage if they want to stay put with the current plan they're on. And if they lose their tax credits based on the legislation that ends, or that extended tax credits that ends the end of December, they're going to go to $2,472 a month, $2,472. Let's round up. Let's just call it $2,500 a month for their health insurance for their family. So 686 to $1,000 if they extend the tax credits for those individuals that are losing it, or if they don't extend it, if Congress doesn't do an emergency session or figure something out, then they're going to go to $2,500 a month. That's literally $2,000 a month increase for their affordable health insurance. How are people going to handle that? Okay. Even in this situation, again, this is another client that one of the family members has a pre-ex condition, and we can look at maybe trying to separate them, and try to find a health coverage plan for a lower cost premium. But you still need to have health insurance because you got the doctors, you want to have the emergency care, you like those copays. And most of our clients, we've worked really hard to help them navigate a new doctor. A lot of times, doctors will be on one plan one year and another plan another year, and it's exhausting because of those changes. And you see a lot of attrition from one insurance carrier to the other. So that brings on some stress for these individual families that maybe have a particular doctor that saved their life or helped them with a medical condition. A lot of times, it's children. You've got a particular doctor that, hey, this is taking care of my kid, and you're having to make a tough decision. Okay, if If I switch carriers, I'm just going to have to find another doctor. And there's no consistency with that. So that's been difficult when you have these types of swings in the health insurance industry, specifically the individual health insurance. And man, I mean, this is these are real numbers of local families here in the San Antonio area. And I've brought up a family of three where we're looking at $4,000 a month on premium. Just right now, I've brought up this visit of a family that was currently spending $686 a month for their family of five insurance, and that is planned to go to $1,000 or $1,100 a month if they get to continue the tax credits that they have. But if those are not fixed, they're going to go to over 20. Let's just call it $2,500 a month. Okay, so that's one scenario there that I wanted to bring up. Let me take a look at just an individual. If we had an individual that needed health insurance on their renewal and what that looks like. Let me give you an example. Excuse me, out of Kingsville that I just had earlier this week, and they've been clients of ours for years. This particular individual, and we had to do a review for them, and their current plan that they're on. Let's pull it up here, guys. Bear with me. I'm having to use some technology to come in here and do the review. Let's see here. Going to update this. And then take a look at this scenario. Okay. The prior plan was just a couple $100 a month. I think it was $226 a month. If this individual is wanting to stay on their plan, it's going to go from $200, a little over $200, to $977. Okay, almost $1,000. So they're going to have to spend $8,000 more a year. And on this particular individual, she's in her late 50s. She's losing the tax credit that she had based off of her income. She's going to go to basically $1,000 a month for a premium. Okay, for one person. And to add insult to injury, this particular plan is providing a copay for the doctor and specialist and the urgent care, which is great. However, she's still subject to a $7,450 deductible and a $9,850 catastrophic or out-of-pocket maximum. So you're going to spend $8,000 a year in premium for your plan, okay? I'm sorry, more than that, $12,000 a year in premium for your high deductible plan. And if something comes up seriously medically, you're going to be exposed to that deductible of another $7,000. So now we're at $12,000. Now we're at $7,000. We're closing in on $20,000 of medical exposure, premium and catastrophically, for just one person located out of Kingsville, Texas. Okay. That again, this is a scenario where we need to correct it. We need to fix this. I think it's finally coming to head. I've seen the good, I've seen the bad, I've seen the really ugly with the Affordable Care Act. Okay, I've seen it help people that had pre-ex conditions and that couldn't get coverage and save their lives. I saw it to where people that just didn't make enough income couldn't qualify for the subsidized coverage. There's a cliff of not making enough money for affordable health insurance, and then there's a cliff that you actually earn too much money to get assistance for affordable health insurance. So I've seen that scenario. And I'm hoping we have some risk pools or some situations for those individuals that are just really sick or can't work, or there's a financial situation there. And that varies by state to state. Texas did not expand Medicaid for adults. And over the past 12 years, I think I've seen enough to where that should be reconsidered. or at least have some guidelines to open that up to specific individuals that need that wouldn't typically get on the Affordable Care Act or don't have an employer-sponsored health insurance plan. Whole nother subject there. But the other thing that we've seen is people losing doctors, over the years. They had a doctor that had helped them out with a condition they had, saved their lives, and they couldn't see that doctor anymore. So we're seeing so many different scenarios with this, and again, I've seen good, I've seen bad, I've seen ugly. I think we need to either. I saw on the radio today, or not the radio, TV earlier this week. There was an individual, I believe it was a health insurance CEO of a local, not a local company, but a national company. And they're like, hey, we just got to redo it. We got to restart, unlike where the past administrations have said, okay, we're going to make it better. Let's modify it. I still think that can happen, but this is finally the year where I've just given you 3 scenarios of very catastrophic situations on the cost of the insurance, okay, with these tremendous price increases. And you got people that are really scared. Okay, you got people that have some medical conditions, and we're the richest country on the planet, the most prosperous, and this is just one thing we can't stick the landing on. So I'm hoping that we see some changes with that, and we've got associations with our industry. I'm hoping they come together, and not just the associations that we're a part of in the industry, but our legislatures really come in and try to come up with some game plans to not necessarily rearrange the deck chairs on the Titanic, but actually to make this flourish and help so many people here. And that will be fun once we can actually get into a position in the health insurance industry where we can help people out with affordable insurance and some options. Because right now we've got a lot of people that are going to get affected with increased in health insurance. Specifically what I'm talking about right now in this part of the show is the individual health insurance. With that said, you are listening to the Mad Insurance Show, Making a Difference in Insurance. I'm your host, Justin Holland, with Texas State Insurance Services out of San Antonio, along with Palmetto Life Group. Just as a reminder, we've got the Mad Insurance Show just to provide value and details about the insurance industry in multiple parts of the industry. Could be health insurance, Medicare, employee benefits, dental, vision, travel insurance. We've got Palmetto Life Group that helps out with the life insurance, the long-term care planning, Social Security analysis, and also auto, home, and umbrella policies. So keep us in mind off of that. The number to reach us if you need help with your insurance options is going to be 210-880-5316, or visit us online at txstateinsurance.com, and you can get dialed in with the both segments of the business and industry, and we can see how we can help you out. We'd love to talk to you, and we're so thankful that you're watching our videos, watching the podcasts that we add online, or listening online or over the radio here locally with KTSA 550. And something I didn't mention at the beginning of the show, we finally have our YouTube channel. Let me plug that real quick. The handle on the YouTube channel is youtube.com/@MadInsuranceShow. As I mentioned last week, I got to do the shameless plug. Please like and share our show if you can, and visit us on YouTube as we try to grow that outreach online. And we're going to start putting a lot of the short clips and segments from the show on that channel, and then it's currently got the full feed of our shows that we've been having every week for the past 11 weeks. So thanks again for visiting the Mad Insurance Show or listening in, and let's keep on going. We just talked about the Affordable Care Act insurance solutions, not solutions actually, the scenarios that we have been challenged up against with a handful of families. I gave an example of a family of 3 at $4,000 a month in premium, a family of 5 that's going from $600 a premium to more than likely $2,500 in premium, and then a single person out of the Kingsville area, just a single enrollment. she's going from a couple $100 a month premium to pretty much $1,000. So those were the scenarios that we talked about a minute ago. If you are facing some higher health insurance premiums, reach out to us and we'd love to help you out and do a complete review and see if there's some solutions or alternatives that you might have not taken a look at. And again, that number is 210-880-5316. So I want to talk about the Medicare annual enrollment period scenarios we've been looking at. And just talked about the Affordable Care Act. Those have been pretty tough. But what I want to do, I'm going to bring up on my computer here a recent client that we did a review on. And just the fact that we're seeing changes in the prescription drug part of the industry for Medicare, and we're also seeing it on the Medicare Advantage. The Medicare medical supplement side of that business, despite having an increase this year, has been stable. Haven't seen any disruptions there. The other thing is the Medicare cost. I'll actually bring that up in the show as well. I want to talk about that because the Medicare cost for your Part B premiums and deductibles were increased. I'll talk about that in the show as well. If you need us to email you over what those increases are looking like for Medicare, just give us a call, 210-880-5316, or visit us online at txstateinsurance.com, and we can send you over what the 2026 cost numbers are projected to be for the next year, because they did increase. And I'm going to talk about that here in just a minute after I talk about a couple of the Medicare scenarios that we're seeing creating some disruptions for the Medicare part of the industry. So let's talk about that. I'm going to talk about standalone prescription drug plans right now. Now, specifically in San Antonio, we're noticing that the plan offerings are decreasing, okay? And even the plan offering decreasing, we're limited as agent brokers now on which carriers we can help our clients review and possibly enroll with. I'll tell you right now, Humana decided, hey, we don't want to use broker channels for our standalone prescription drug plans. And that's tough for agent brokers like us. You know, we've worked really hard in time, money, and effort for years to build up a business and clientele to these carriers. And these carriers are saying, hey, you know what? Thanks, but, you know, we don't need you anymore. That's ultimately what it's coming down to. And there's really nothing we can do about it. They're trying to do stuff legislatively through the state and in Congress as well. I just don't know if that will change or not. So us as agent brokers have to pivot. And if, you know, we've got to do the right thing as well. So we're doing our best to do prescription drug reviews, even though we're really not getting compensated for it. And it's probably the most time-consuming part of the Medicare process or review process, because you got to bring in all those medications, double-check them, compare them to formularies with other carriers. You got some plans that are going away, some plans that are sticking around, but the premiums are increasing, and it's exhausting. I was up until probably 1 a.m, you know, trying to help out some of our clients with that. Other agent brokers aren't even messing with it. They're saying, hey, you know, you just go to Medicare.gov, handle it on your own. We're trying to take a different approach and handhold that the best we can. And all we ask in return is keep us in mind for other lines of business, you know, that maybe we can help yourself out or your family with. Could there be fees coming for those in the future? Yeah. I had to bring in a fee years ago when we were noticing some disruptions and not getting paid or compensated on plans. But it'll be interesting how that shakes out. But what I want to dive into specifically on prescription drug plans is the fact that we're limited on what we can offer or provide or basically do a review on with our client. I actually had to use two different systems. My agent broker system, where I typically do our enrollments and our quoting, and then I had to go to Medicare.gov to pull up some plan details on plans that we don't have the ability to sell. So I had to help out this client review that, and it was tough. We're providing them a review. They're going to know exactly where they stand. They're going to probably want to change coverage and plans because they were not happy with the current plan they've got now. There's been some hiccups on some of the higher tier medications that they will or will not cover. So we're looking at an alternative carrier, and it's going to probably be a carrier that we don't get compensated on, but we're doing the work to help tee that business up to that carrier. So that's frustrating. The customer's getting taken care of, but there's going to be some changes coming in that. And let's dive into the prescription drug review. Like we will put together a review with multiple carriers. Typically, we narrow it down to about three carrier plans and give that client, out of the multiple that they have access to. We're watching. I remember doing quotes years ago for prescription drug plans, and I want to say there were 20, 30 plus plans in our market. Now I think we've got less than 10, to choose from or help our clients with. So that's shrinking significantly. But what I wanted to bring up that's important is when we do these reviews for prescription drugs, we'll plug in all the medications. We'll see what the premium looks like. We'll be able to basically tell you, hey, this particular drug is a tier level 3 on this carrier and a tier level 1 here or a tier level 2 with this carrier. I'm literally looking at one of my reviews for a client that I did last night, and it's a very common generic medication. And believe it or not, it's a tier level 3 with one carrier, it's a tier level 1 with another, and a tier level 2. So it's a dance when you're doing prescription drug reviews because you might tilt towards one carrier, but you have to go to double check a medication. Where it can get really time consuming is when you have individuals that are taking quite a bit of medications. And so this is a tough part of the industry, the most time consuming and the most confusing. So where we've got a challenge is the consumers relying on an agent broker that knows the market, knows the carriers, knows what could be best. And we can't, we're limited on what we can do to help out our consumer because we're not going to get compensated for it. So that is that's going to come to head. I just brought up the individual health insurance premiums. This is a situation where I don't know if CMS really knows that the disruption that's coming and the value that's provided on using a local agent broker to really review and take a look at those plans. Multiple times this week, I've had very quick visits where we're able to size it up and get them going, and then some of them they're extensive because there's some medication changes or they just got prescribed a high tier medication and it's expensive and they're having to make a tough call on whether to continue taking that medication. Um, so prescription drug plans, there are, believe it or not, some plans out there that are still a zero premium plan. So those individuals that could be listening on the show, like Justin, I don't care about this prescription drug part of Medicare. I don't take any medications. Totally get it. I understand. But you are required by Medicare or you're penalized if you don't have access to credible prescription drug coverage to have prescription drug coverage. And that is a tough situation for some individuals that are forced to have to purchase a prescription drug plan. Again, there's some plans that are $0, so that eliminates that. It helps bridge the gap, so to speak, and it softens the blow for people who are like, hey, I don't need prescription drugs, and we can get them compliant with a plan that's a zero premium. I think this is the last year that I will be shocked if we see zero premiums going into year 2027. But again, I've been surprised before. We'll see how that plays out on the Medicare prescription drug plans. But if you need a review of your prescription drugs, we will try to do our best to help you with that. All we ask for is keep us in line for other lines of business because it is time consuming. We've got some tools that can help assess that and size that up very quickly for you. But I will tell you, be patient with us. We're trying to help everybody that we can, And this has probably been the most challenging enrollment that we've seen. Um, I think ever. Probably, I mean, at least the 12 years that I've been helping people out with individual health insurance or group or Medicare, I've never seen anything like it. So just be kind, be patient with your agent broker. If it's me, uh, all I'm asking is, hey, just I appreciate your patience, but man, it has been tough trying to help our existing clients, help out so many people that are getting referred to us from our great clients, and we're doing everything we can. I'm hoping to see some good changes, maybe some special election opportunities when we get into next year, but, Medicare prescription drug plans, man, this has been a tough one, this year, especially when the carriers are just not gonna compensate agent brokers like ourselves, to assist the clients with enrolling them into the plans. I hope that changes. I hope something comes out of that, because we wanna help our clients. We just can't do it for free. We provide a great value add service, as many agent and brokers do. We need some backup, some help, because this is going to be a challenge. So prescription drug plans, I talked about that. Let's talk about standalone Medicare medical supplement plans. I think I brought this up on one of the prior shows. Um, the original Medicare is a great place to be. Sticking with just a Medicare A for your hospitalization, Part B for your day to day doctor care. Outside of that, there's a premium to your Part B depending on your income. Which that reminds me, I need to talk about those Medicare increases. But the Medicare medical supplement plans, we are one of those agent brokers that we do a lot of Plan G. We're starting to look at some of the other Medicare supplement plans that will be a lower cost premium, but increase the exposure that you might have, up to $3,000 or around that. So it just depends on your situation. A lot of individuals would rather pay a little bit more per month and just have that, $268 deductible. It's actually going to 283 Part B deductible going into the new year for 2026. Because if you think about it, $283 is like a doctor visit and a half. Once you knock that out, you're done for the year. Okay, you've hit that deductible amount. You just got to continue your premium. Now, could there be some things that are not covered? Yeah, but it's rare. That being on original Medicare A and B with the supplement plan is a pretty solid situation, but it comes down to affordability. We've got a lot of clients that they're struggling just to make their current $185 a month premium for their Medicare Part B. And let's just talk about it. Let's talk about those costs that are going up. Um, Most individuals on Medicare, their Part B premium as of right now is 185 a month. Okay, that is going to go up to 202.90. It looks like on this updated form. Now, the more income you make for yourself, only yourself, or if you're file a joint tax return, that income increases, so do the premiums for Part B. And that catches a lot of people off guard. I had a couple in the office last week, and they were shocked on what the cost was for Medicare A and B, and the fact that they get a income related adjustment on their prescription drug plans as well, based on the income that they both have, because they're both continuing to work. They're at a higher threshold, and they didn't realize that they're going to be spending a good amount of money on their Medicare Part B, as well as a supplement and a standalone prescription drug plan. So it's very important that if you're aging into Medicare or you're coming off of a group employer sponsored plan, visit with an agent broker like Texas State Insurance Services as soon as you can. We're here to help you out and navigate that. I did a presentation up in the Hunt Kerrville area. Man, that was a somber drive driving over there early there this yesterday morning and back out of there in the afternoon. But we helped a lot of people out with a Medicare review, and they wanted to see, hey, Justin, does it make sense for me to come off of the group plan versus go full fledged Medicare? It depends, on their particular situation. It was actually better to go full fledged Medicare, even though they were going to spend a little bit more money per month going full fledged Medicare. their exposure was significantly lowered. They went from a $7,000, deductible that wouldn't have been met for their current employer sponsored plan to a 200 and what will be a $83 deductible. That's reasonable because this individual had some medical stuff going on and will continue to have some medical situations in the future. And there weren't cheap scenarios or situations for their health. So, hey, it absolutely showed better value to pay a little bit more going to Medicare from the group plan than sticking on it because of the overall exposure and cost. There wasn't any high tier medications that were going to hinder that as well. So that gives you a scenario, a brief one of what that looks like. But back to the um, Medicare costs and premiums for 2026. The big things here are to consider is the fact that Part B deductible is going up to $283. I still think that's a reasonable deductible, especially if you're on original Medicare. That really won't apply if you're on a Medicare Advantage plan that's basically taking over managing your Medicare A and B. Whole nother topic there. But we're noticing a increase in the Medicare Part B premiums and that IRMA that gets tacked onto the prescription drug plans. So you really want to make sure that you visit with us or reach out to us and say, "Hey, Justin, I heard you talking on the show about the 2026 Medicare costs and premiums. Can you send that over to me?" Give us a call 210-880-5316 or visit us online at txstateinsurance.com and we can send you over what the Medicare cost and premiums are going to look like for 2026 and send you an email. I have to text documents to individuals that would prefer doing text as well. We're here to help send those over to you. But that gives us just a quick glance at what the Medicare cost and premiums are going to look like going into the new year. We'd love to send you out that detail and information. So we've talked about the individual health insurance industry, those changes that we had with the marketplace plans. That was not a fun conversation a minute ago because of the increased premiums that we're seeing and the costs that people are having to face for their individual family health insurance. We talked about standalone prescription drug plans, some scenarios there. You know what? Now that I think about it, I want to bring up a scenario that we're seeing more and more of. Some people are losing their Medicare Advantage plans. They are just getting eliminated. And it's important for you to know that you can absolutely utilize an agent like us to enroll you into another Medicare Advantage carrier, which is a lot of times the case. But you get a guaranteed issue opportunity to go back to original Medicare with a medical supplement. Okay, had a lady, a friend actually that I've worked with years ago, and it was so fun to meet with her and revisit, and we got to catch up. But what made it even better is the fact that she qualified to go back to original Medicare. Now, here's the trade-off: it was going to be more expensive for her to go to original Medicare and get a supplement plan, but the fact that she got that guaranteed issue right, she was like, "Hey, this is an opportunity for me to go original Medicare, have a supplement, not be subject to a network or a managed care plan like what I had. You know what? Let's run with that." And to help provide a little bit more value in the solution that we helped out with that client, we chose a carrier that has very good consistency over the past 7 years of either zero or single digit increases on their supplement. Now, this past year, everybody had double digit Medicare supplement increases, it seemed like. However, what's nice about this one particular carrier, we went with the higher cost supplement plan, knowing that more than likely, if those costs get high enough, she could actually probably, without underwriting questions, go to a lower tier plan that would have a little bit more deductible exposure to meet. However, it would be a lower premium. So we're trying to help our Medicare clients with some long-term play solutions, not just, hey, let's move you over to this plan and try to, tilt that. We want to look at some long-term care situations or solutions for their health insurance alternatives and changes. That was a perfect example of having your Medicare Advantage plan eliminated, taking advantage of the guaranteed issue rights to go into a Medicare supplement plan, despite the added cost, but also know that if those costs still continue to increase, which they will, the supplements are going to go up in cost. We've got also another countermeasure, so to speak, to be able to get them on a higher deductible plan. So if that scenario might be something you need to look at, let us know. We'd love to help you out with that. Again, it's Justin Holland with the Mad Insurance Show. You're listening to us here on KTSA or on YouTube, our new YouTube channel, or the podcast that's syndicated nationally. We're so glad you're listening to us. The Mad Insurance Show is just a show to help provide value on different segments of the insurance industry, from health insurance to Medicare, employee benefits, life insurance, long term care, auto and home insurance. We've had some guests. I need to bring them back on regarding the auto, home, and umbrella policies out there. We'll probably do a segment on commercial line insurance as well. So we've definitely got some guests that I want to bring in, possibly as soon as this holiday season. So we'll have them in. If you're listening to the show and you say, "Hey, Justin, I got a question," either based on the scenarios we talked about today, or maybe we didn't, give us a call at Texas State Insurance Services, 210-880-5316, or you can visit us online at txstateinsurance.com. And that goes for our Palmetto Life Group division as well if you need help with the life insurance, auto, and home. But we're so glad that you're listening to us today. I've been talking about all the scenarios that we're seeing in the health insurance industry, specifically the challenges and high premiums we're seeing on individual health insurance, as well as the Medicare plans that we've got as well. Now, keep in mind, too, we help out with small employee benefits plans and mid-market plans and even large group plans where needed. And I want to talk about what we're dealing with that. Just before coming on the show, I literally talked to 3 of my mid-market health insurance clients, and it's been challenging for their renewals. And some of those challenges, and some people that are listening to the show today or watching us online might might relate to these challenges. A lot of times, these small group health insurance plans are subject to having 50 full-time employees, and they're struggling to be able to offer affordable health insurance for their employees. And again, 3 conversations back to back to back because we were basically waiting on the carriers to let us know if they want to offer quotes and rates for these individuals. And some of them did, some of them did not. So what's happening is we're noticing a crack in that part of the business as well. You the way the law is, you're forcing employers to have to offer a health insurance offering that's going to be unaffordable, not just for the employee, but for the company as well. So I'm hoping we see some changes on, basically what they consider is a applicable large employer. And one of my clients this morning made a good point. Is like, hey, if you look at it, the state law of this actually it has it at a higher rate than what the Affordable Care Act is. Is the state not supposed to trump that, basically on the Texas Department of Insurance? I didn't have an answer to that, so we're reaching out to one of our legal contacts on that. But, it's just it's been a challenge to help our small group business clients provide some affordable coverage. Some of them is squeaked by, some of them are in a very good position. I think I can count them on one hand, 5 or less single digit health insurance increases out there. Okay. Everybody else was double digits. So not only do we have challenges for the companies that are struggling to meet those participation guidelines, or maybe there's some high risk claimants on the plan, and that doesn't help, that actually hinders the ability to get more affordable options for those employees or for the company to bankroll or subsidize. But even the companies that have great participation or are very generous on their contribution to the plan for the employees, and sometimes even the additional extended family members, some of these carriers are not budging on some of these increases. We had one carrier, they were headstrong on 48%, and they still kept it within 40%. So we had to go to another carrier which we do for all of our clients. And luckily, another carrier said, "Hey, you know what? We'll go to 16%, and this is what we'll do." Great. Client was excited because despite having to switch carriers, they were able to get into another solid group benefits product or carrier for their employees and not take on a almost 50% increase in premium. So it's not just the small groups that are struggling on participation or high claimants. It's even these groups that have very solid and healthy participations. Some of these carriers are holding them accountable on maybe some claimants that came off the plan that are even still no longer on there. So it's been a challenge on the small group health insurance plans that we've been helping our clients navigate around. Something I've been bringing up to some of our clients too is don't be surprised if some of those employees that just for whatever reason didn't enroll on the group insurance plan are getting sticker shocked on their marketplace plans that they probably shouldn't be receiving a subsidy on, but some agent got them on the plan. And they're going to come back to the employer and say, "Hey, by the way, can I take another look at that plan?" It might be rare that it's less expensive than the marketplace, but depending on the contribution for that employer to the employee on the health insurance, it could make sense. So I think we're going to see a shift of people getting sticker shock on their individual health insurance when they should probably be on their employer sponsored health insurance and make a change there. You've got deadlines for that to be able to do that with your employer has a deadline on you to be able to get on that plan during their open enrollment because coming off of a marketplace plan in most cases is not a qualifying event throughout the year. Now, a lot of times an employee will not get on an employer sponsored health insurance plan that I've seen over the years is because it's just unaffordable to add a spouse, a child or children, one of the other or both. And we'll see a lot of employees, hey, if it's not affordable for my entire family, I don't want to put myself on a plan and then get my, not have coverage for my family members. Well, that's where the family glitch legislation comes in that got to the bottom of this issue where, listen, your agent broker or the benefits broker for the company that you work with should be helping you take a look. Hey, is the group insurance plan affordable for me? If it is, you as the employee should probably be on that. And then we can look at maybe alternatives for the spouse, children, one or the other, or both, for more affordable health insurance. And we've been pleasantly surprised. Now, with the extended tax credits not going away, that might not be the case for some of these families, but for others, it could be, and it's worth taking a look at. So I can't stress enough when you've got a situation where it's too expensive to add a spouse or children, one or the other or both on your group health insurance plans. Let us know, and we can take a look at maybe some alternatives that you can leverage where we keep good participation on the company plan with that employee. The employee gets on there, and then we have a more affordable solution for the rest of the family members off of that. So please let us know if that might be a scenario for you. We'd love to help you out. Everybody, you've been listening to the Mad Insurance Show, making a difference in insurance. I'm your host, Justin Holland with Texas State Insurance Services and Palmetto Life Group. We're so thankful for you to join us today on the show. I've recapped and talked about the challenges we've been seeing on the Affordable Care Act health insurance plans and some of those significantly or tremendously much larger premiums that we're seeing in the market and it's been tough. We talked about Medicare solutions that have been changing, prescription drug plans, supplements, the cost of Medicare going up. And then I just wrapped up here a minute ago talking about, the challenges we're having with small group benefits plans and some of the solutions we're trying to put together there. Something I failed to mention is I'm hoping ICRA, if you don't know what an ICRA is, let us know, could be a scenario where it is allowing the employer to just help the employees with their health insurance, but they're going to go out and shop it on their own, do their own enrollment. So if you need some details on how that could help make your insurance plans for your employees more affordable, not just for the employees, but maybe the company as well, and have a healthy bottom line, let us know. That I think I'm optimistic. Let me say, not think. I'm optimistic that we'll see some incentives to make some significant changes to affordable health insurance as it relates to employer sponsored coverage. But I'm going to wrap up the show here today. Again, it's Justin Holland with the Mad Insurance Show with Texas State Insurance Services. Please keep us in mind for your Medicare health insurance, individual health insurance, as well as your group benefits. Palmetto Life Group can help out with your life insurance, long term care planning, social security analysis, as well as auto, home, and umbrella policies, commercial lines if you need that as well. The number's 210 880 5316, or visit us online at txstateinsurance.com. And don't forget our YouTube handle, which is youtube.com/at Mad Insurance Show. We hope you can like and share the show online. We thank you again for joining us, and we'll talk to you next week, everybody. Take care.